Everybody, this is Jim at SP500chart.com. It's a little bit before 4 o'clock on Sunday afternoon, and rather than wait for the Sunday night futures to open, I'm going to do the video now because the lines are what they are. Don't know what may be developing over in the Ukraine with Russia, but that could be market moving news, so just keep up with that. But we're going to look at the chart before seeing how futures think things may react. And before we take a look, I need to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Okay, the markets closed, the S&P closed at a new record high, up about 5 points, and we had an interesting day. We were up strongly in the morning, and then about midway through the day, pretty much gave all of that back plus some, then to rally with a positive close, up about a little bit more than 0.25%. Just to remind you, we are looking at a potential, another one of our truncated inverted head and shoulders patterns. Here's the left shoulder, head, short little right shoulder, an almost perfectly parallel neckline that has not been a perfect show of support. We got over it, and then we got down below it just a little bit earlier in the week, but now we're above it. We also bounced on that trend line, on that neckline, late in the day on Friday. We closed over both our neckline and our what I had been calling our all-time highs line, back from the highs set in the very end of December and in the middle of January. So we're over all of that. But I have to be honest with you, if we zoom in just a little bit and look at this, I'm not particularly thrilled with the way we go up and then give so much of that back. Like Friday, we go up and then give it all back quickly. So now you might say, well, maybe that's a pullback. Well, maybe it is, but it still does not, it just doesn't give me a tremendous amount of confidence. We're still above important trend lines by a small margin. I'm still waiting for a close above 1860. Almost got it, 1859.02. You can also see that where we bounced on Friday lines up perfectly with the last three spots in the chart that preceded fairly nice little rallies. This one not as much as the first two. However, I want to point something out to you. If we draw a resistance line and a support line here, we've got one of those situations where we are looking at lines that do converge. In other words, we've got a slightly wedge shape to what's been taking place over the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions. Now, we can go up. It could be we break out over this top line, and Monday we may be at 1883. Could be. Okay? But so far, this has been following a pattern that typically is a little foretelling of weakness at some point down the road. So I've got to point that out. It is what it is. Our inverted head and shoulders pattern, truncated inverted head and shoulders pattern, has a really Strong target has a big target. If we measure the depth of our pattern from the neckline, I think I got that about right. Since it's horizontal, it doesn't matter where it broke out because that line is horizontal. We get a target just under 1960. But you can see that our little wedge that we seem to be in right here, if that continues to control things, that's going to be a hard thing to get to. So, eventually we're going to see an inverted head and shoulders pattern that fails. So I think with what I'm seeing here, with all of these resistance levels up around, congregating around 1900, 19 teens, 1920, you see them here with all of this stuff going on. It just seems to me like that 1960 or 1956, 58, wherever it is exactly, that's going to be real impressive if we get up there. And I've said that before over the past 2 or 3 years, and almost always I've ended up at the end of the day saying, well, we did it. So I'm going to keep this on the chart. About 1958, something like that, just under 1960. But what we've seen over the past 2.5 weeks is going to have to ramp up a bit here, if you know what I mean. So let's see if we get some stronger positive movement this week. Maybe we can take out this top line here. Maybe we can really jump up and get some steam on this thing. But right now, for the past 2.5 weeks, that it doesn't look that likely. So in other words, we've got a fairly intermediate term chart pattern that tells us look for almost 1960, but the path that we've been on for the past 2 weeks or so says, oh, really? So, what do you stick with? Well, if we're going to make it to 1960, one thing's for sure, at some point we've got to see something more than what we've seen in the short term. So let's do this. Let's go into the week with this pattern in mind. But let's keep an eye on this bottom support line, and let's also keep a line on this neckline that is at about 1846. It is possible now that we end up really kind of revisiting this whole series of what we've seen take place since the beginning of February. And what I mean by that is this. How many times in the past have we seen a fairly narrow channel up start to go sideways, and then we end up revising things? We end up saying, well, this was just a channel that defined our first leg up inside an even larger pattern. We may be seeing that again. We've seen it before. It wouldn't surprise me. But with that in mind, if our small pattern works here and we stay above this support line, then it could be at some point down the road we have enough information to say, well, actually, here's our pattern. You see what I'm saying? We could end up revising this channel into something that is a little bit more encompassing, but we don't have enough information going out to the right side of this chart yet to know what that might be. Just like when we were headed down in late January and into early February. At one point it looked like we were just going straight down in this channel right here. Then we went sideways. Then we went down again. By the time we got to about this level here, we were able to say, okay, I've got enough information. We've got 2 points to define a support line, and we've got 3 points to define a resistance line. When we get over this resistance line, that should signify we're ready to move onward and upward. So now we are moving onward and upward, but we don't quite know where the lines exist that tell us when this move may reverse back down. So that's kind of it in a nutshell. Let's keep the 1958-ish target in mind. Let's keep our truncated inverted head and shoulders pattern in mind. But let's not lose sight of the fact that the past 2+ weeks have been taking place inside a pattern that does not produce by itself a real strong feeling in yours truly. So, and plus, it'll be real interesting to see what happens if we get up into this 1910, 1920 area, because we've got some trend lines up there. It'll be fun to watch. So, guys, as far as the week went, where'd it go? Here we go. As far as the week went, we came into the week with this neckline in mind, and really, to be frank with you, the week was just sort of so-so, hanging around the neckline. I think one thing that I felt pretty good about was, throwing up a couple little short-term trend lines on the chart that sort of told us where we might bounce. But now we have an additional support line right here. Take this out and get back under this neckline, then all bets are off on the success of this potential truncated inverted head and shoulders pattern. Because if we take out this 1845-ish area, say call it 1840, if you take out 1840, then I think you got to be looking for a loss of at least another 30 points or so to get down into the low 1800s. I just think if that happens, we got to come back down and retest maybe this spot here that's at about 1810. But all in all, it was a fine week. Nothing spectacular, nothing scary. But this week, I think I really would like to see that close over 1860, and I'd love to see getting up over this line right here for this market to show me, hey, I'm serious about this. We got 1958 in our sights. We're going to do everything we can to get there. If we get that, then I'll feel really good about that inverted head and shoulders pattern. But if we just dilly-dally around, and especially if we start taking out some of these little support lines right here, then I would say we might need to look back at that inverted pattern and cast a little doubt on whether or not this is going to be the one that fails. Eventually, we're going to see a pattern that's not going to work. And I hope you've been with me long enough to realize we've seen so many of them that have worked. But you got to understand, eventually, one's going to bite. One's going to bite you. It's going to look pretty. It's going to look like a nice little cocker spaniel just looking up at you with those big brown eyes, and you're going to reach down and it's going to bite. So hopefully it's not this one. If it's not this one, it might be the next one. I'm just saying, just keep a watchful eye on what's going on. So guys, there's your video and weekly review for the week that ended at the end of February. We'll start off tomorrow on March 3rd with a new week. Let's see what we get. And as always, I want to thank you for your subscription. If you're not a subscriber, hey, go to sp500chart.com. Check it out. It's pretty cheap. And if you're looking at these videos that you might say, well, what do subscribers get? I'll tell you what you get. You get this kind of analysis after every day's close. I said when I started this website that I would try to make it 95% of the time. That maybe once a month something would come up and I couldn't get the video done. So far, I think that has happened once, maybe twice, in the past year to year and a half. So I'm pretty comfortable saying that you get a video after each day's close that takes a fresh look at where things have happened, where trend lines have or have not worked. So guys, think about it. Take care. Thanks so much.